Morning, everybody. It's Brian Caprice, and this is our Monday morning market breakdown. So we are entering the very, very end of July. So this is kind of an interesting time. It's the last full week, and again, very, very popular vacation time. So with that being said, there are not tons of news releases this week, but we're going to go over the charts, and we're going to look and kind of see what's moving and where there could be some potentially some potential fireworks this week. There is actually one or two releases that I think will provide some great opportunity. So we will dive into those things. Before we get anything started, let me go through kind of first where I am so you guys understand kind of where I'm coming from with all this. I think it's important to understand where your presenter is not biased, but where our point of view is actually shared from and coming from. So with that being said, I am the president and CEO of Keep Trading Simple. And what we do over there is we try to keep the distractions out of the market. A lot of them out there, a lot of professionals tell you need X, Y, and Z tool. When in reality, what we believe is if you can read price, you can definitely become a trader. And that's what we believe in. So I've been trading for a while. I actually started in the tech bubble. It was absolute perfect timing, but it gave me a good perspective on the market about, there are ways to make money, not just when it goes up, but also when it goes down. And I really fell in love with that going down piece of it. So that was a huge learning experience for me and something that I, make sure that I teach all traders across the board, no matter who I'm talking to. Very busy guy, you guys can see out of the family here. The little one is now walking. So as you can imagine, a 1-year-old that walks is into everything. My sons are, they're actually twins, even though one's bigger than the other one. They are 9, they're into lacrosse. They play in multiple teams. So I stay busy. And what I did is I created a couple different programs for Nadex, the 30-minute trader program, as well as 5-minute binary courses. And it's for people that have full-time jobs. So I am not a believer in spending 14, 16, 18 hours a day in front of a computer. I created those things with kind of, my trading style in front, basically hard into those things. I believe in using technology. I believe in looking, into set and forget type trading. I believe in looking at, past examples and price action. I'm not a person that will sit there and follow an indicator all day long. I just don't believe that they necessarily work that way. Nor do I have the time to do it, and I don't think that you guys should either. I was in the financial advisory division of one of the big 3 banks, so I got to see how the other side of the coin lives, the inside of Wall Street. I didn't stay in that industry long. It was nothing like I thought it was going to be. There was no trading, no charts, no nothing, and I knew that I could do better for my clients, and I wasn't allowed to. So just didn't feel good about it, left, and actually went out and taught people how to trade. And I've been doing, did that I've been doing that now for, almost 9 years, 10 years. It's actually, I spent 6 years traveling, but I've stopped traveling. So it's been a while. And so I've got to see a lot of different things, hear a lot of different stories. I actually even worked in an office on Wall Street, literally 2 blocks from the exchange, teaching people to trade. And actually had prior floor traders come in asking to be taught because things have changed so much. So it's an interesting time that we're in. With that being said, let's jump into some risk disclaimers before we get started and mention any other things about charts. This is for Nadex. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here today is for information and educational purpose only, and it shouldn't be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Now, any trading decision that you guys make is solely your responsibility. Past performance is not necessarily indicative of future results, and Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. Okay? Now, trading can be volatile, and investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Important you guys understand that. A lot of people don't fully grasp how powerful that really is. Huge, 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 huge. Now, Nadex is subject to U.S. regulatory oversight by the CFTC. Okay. Again, important that you guys understand what that is, but the most important aspect of this whole risk disclaimer is, again, understanding that any trading decisions that you make is your responsibility, and then understanding the Nadex contracts, guys. That's huge, absolutely gigantic that you guys understand that, and the power that can provide for you. All right. So here's my top 3 for the week. It was kind of slim pickings, and we'll go to the, the economic calendar so we can kind of review, popular times and times that you should be kind of, have your radar on. But these are the 3 big ones for the week. The first one is going to be Friday, and we have the advanced GDP number. Now, this is kind of important, and here's why. Okay, the current president he looks at kind of the stock market or the GDP in particular as kind of the overall gauge of kind of how well he's doing. He's not one of the popularity presidents. He's purely kind of business focused here. If the market's doing good and GDP is doing good, he's doing a good job. So he's definitely focused in that aspect. Well, when we get advanced GDP numbers, it kind of gives us a foreshadow where we're going. And 3 was always a very, very big number for him. Now, again, it's 3 is at the end of the year. It's not kind of just in this kind of breakdown. This is a quarter over quarter breakdown. And it's supposed to be 1.8, although people are expecting an adjustment to the last one. Okay. The last one was a 3.1, and people are expecting, actually, I'm sorry, it was a 3.2 last time. But people are expecting that to be adjusted down. Okay. One other aspect of that, again, I'll show you these numbers in a second, is the advanced GDP price index. And that was 0.9 last time, and it's supposed to be 4 this time. So that's quite a large kind of jump there. When you look at that one historically, the forecasts typically come in anywhere from 1.3. This time last year, that one was coming in as a forecast of 2.3, and it came in at 3, which is a big jump. Well, it's expected to be 4. That's the biggest number that we've seen, put up there with a forecast or an actual number. So I think there is a potential that there could be a disappointment with this one, okay? And we'll see how that kind of plays out. But that's going to be going into Friday morning. Number 2, it's actually kind of a back-to-back release. Like I said, it's kind of slim pickings this week as far as high kind of, power news releases. First one at 7:45 Eastern. Yes, 7:45, not the 4:45 that we typically see in the morning. It's at the end, kind of the middle, end of their day, is the Euro monetary policy statement. Now, this is important because, you're hearing rumblings that the European Union is, slumping a little bit and they're having some problems. And, actually Germany has some numbers earlier on Wednesday, some manufacturing numbers that are not looking great, right now forecast-wise. Kind of somewhat in, below where you'd like them to be. But anything that the Euro talks about any type of weakening or anything, that could send a lot of these pairs tumbling, particularly the pound yen. The euro pound. The euro pound has kind of been up in that upper reaches, for a while, and it's really needed a catalyst to kind of start coming back down to really gain some momentum in that kind of trend reversal. Something like a monetary policy statement mentioning something about, it's weakening, we're seeing, slow conditions. That could be a big kind of firecracker to start, really, again, that could be the wall that, and the catalyst to drive this, there's some of these euro pairs back down again. Number 3, right afterwards. So this is going to be a little bit more challenging because at 7:45 we have one thing, and then bam, we have the U.S. right behind it, and this is U.S. core durable good orders. Okay, this is coming in at 8:30, and again, obviously core durable is more important than durable, but they're both coming in right after each other, and it's not a huge number. This one. Recently, I'd say, June, May, and April, we've been above the forecast. May was just right below, but the last, April and June were both above forecast, so this one has been good. Well, the forecast is picked to be 0.2, which is lower than what the actual was last time. So whenever you're looking at forecasts being lower than what actuals were, you start kind of wondering, like, okay, is this on the decline? Like, are we not getting the orders in? Although there has been, misses the last 2 times to the top side. So we'll see how that one goes. But I think that has some power as well. Again, anytime you see anything in the morning and there's not a lot of news and you have a red news release like this, that could be what determines what's going on that day. There's a press conference, but that's kind of it. That's Thursday. There's nothing there on Thursday. We don't have any meetings. There's no, major, any major, other news expected. That could be what literally determines where the stock market moves for that day, particularly heading into the advanced GDP number. Especially if there's any type of negative intonation in there, that could be kind of what sets us up for advanced GDP, because once the news, major news outlets catch wind of that, forecasted number to be low and GDP only being 1.8 after, and adjusting last time, they can start lumping this on there and, we could have a negative week. So that's what's going on over there. All right, with that being said, let me pull kind of the greater piece so we can get kind of an outlook for the week. Again, Daily Effects is where we find a lot of our news releases. Really, really great site. They got all kinds of things going on. This is a section about sentiment. Definitely, if you guys haven't been over there, please go check it out. It's just one of those sites that they got some really, really smart individuals over there. A lot of resources that help out. For doesn't matter what you're trading. Very, very clean platform. Come up here, go to economic calendar, and that's what we're going to use. Okay. First thing we do when we ever go here, go down and change this. Okay. Otherwise, your times will be all messed up. Go down to filters. Also, I remove Mexico and low. close that down, and then we'll go to the weekly view. All right, so this is kind of what we're looking at for today. I don't expect too much movement from the BOJ today. I wouldn't. It's considered high because obviously, he is in charge, but I just don't see. Japan is not really the market mover that many people think it is. So we'll see what happens with that one. But going into Tuesday, you can see we really don't have much. I mean, we have home price index and existing home sales for the U.S., but that's not really. I wouldn't quite say that is the biggest market mover, right? I mean, think about it. Existing home sales, people can try to say, oh, well, there's a slump, or it's not a slump. It's like, it's summertime. It's not going to be big anyway. We're in vacation time now, right? This is July. So not really expecting these numbers to be huge. I mean, there's a little consumer confidence going on, but then that's it. Nothing we don't hit anything until, 8 hours later, when we go into the Australian news. And again, there's some Australian news and these may be tradable, but Tuesday is pretty anemic, right? Wednesday, more of the same, right? We really don't have much. We have all this, composite manufacturing number, Eurozone data, all really, really early in the morning, but it's all kind of, I mean, this one is, kind of the entire zone, but I mean, Germany's really the one that matters the most there, and that number will already be out, so people will know based off the German number. The pound loans, it's not really going to move the pound too much, right? And mortgage applications again. We have some manufacturing PMI numbers, and this may give us a little bit of a bounce on Wednesday, but I think the most tradable thing on Wednesday morning is going to be crude oil. Okay, if you guys are looking now, crude oil, we're back down to 56. This was, over 60 just a bit ago. And again, you're talking about, tensions in the Gulf escalate, who's shooting whose drone down today, and it's still at 56. So, again, summertime, that number typically, cranks through the ceiling, right? That's always when it pops. Not really doing it this year. And especially, again, maybe it's because of the heat wave that just rolled through. I don't know. But I was kind of surprised to see it's still at 56 over here. All right, so that could be the most tradable thing on Wednesday. Going into Thursday, you can see that we have these, deposits and central bank decisions and things. But I think their talk is going to be really what's most important, and we talked about that. 7:45 is when they're going to give their policy statements, and again, that's kind of right at the rate decision. It's all kind of in here. Draghi speaks right after, but again, the policy statement comes out right in here. Okay, and again, so that will be a high release for them. I don't expect them. I don't think there'll be any surprise rate cuts or anything like that. But just mentioning what could be going forward, is there going to be a raise? What are the outlooks of a raise? Those are the kind of things that I think will be kind of, at front of the radar, right? He makes a statement about how we're not going to raise the rest of this year because of economic conditions being soft. Boom, there's euro weakness. Okay. Then we can drop down. Here's our core durable good orders. Again, here's our advanced trade good orders. They all come in at the same time. So, I mean, you can kind of loop these all in. Initial jobless claims, the continuing claims. I don't know. The news will talk about that maybe, but, this is what the market's looking for, is the two durable good orders. All right. And then going into Friday, you guys will see our gross domestic product right here. Okay. And again, you guys can see that they're actually saying that it's already 3.1, but this was 3.2 before. So I think they've already written in the adjustment. And again, they're saying it's going to be 1.8 this quarter, which again, drastically lower. And some people may say, oh, well, wait a second. But obviously, this is different depending on what quarter we're in. All right. The rest of this, I'm not really as concerned about. The price index, again, this may be, we'll see kind of how these two pop out. But again, I think at 8:30, all eyes are going to be on this GDP number, because again, that is how the president kind of associates, what his success is. Now, with that being said, if the number is bad, I'm sure he will have a speech prepared, and I'm sure there'll be tweets going out. Okay. Typically his response to news or anything that he's not happy about is a tweet. If the GDP number is bad and somebody starts, beating him down or making any comments about it, don't be surprised if there's a tweet that says something about, the economy, or takes a shot at the Fed or something like this. Okay. Again, if this is bad, I'm sure this is going to go back to the Fed in December. So we'll see how the market responds to that. Okay. So just be cognizant of that. All right. So with that being said, let's go back over to charts. Let me actually go to the top here. We're kind of starting from the bottom. All right. Give this a second. All right. I love when it makes it look really, really huge like that. And again, not a bad push in the last 4 hours. All right. So one thing, and again, there are probably, if you guys have been following us every week, I do appreciate, you'll see there's a couple more squares on here. So I'm using this heads up display now for two different groups. and just trying to continue things through for people that are in both. So we've been talking about this for the last, what, 2, 3 weeks now, and then again prior to that. There's this blue area right here between 75.50 and 76, this 50 pip range. It's just acted like a magnet and sucked this thing in. So as far as trading, this has been a lower time frame type setup. You guys can see on the 30-minute we've kind of bounced back and forth between ranges. Lower on the 4 hour, you can see we've kind of bounced off a few different areas, but it's been very, very small, and the retracements are very, very tiny. Again, same 50 pip zone, but not really anything that's screaming trend. Okay. Now, this is one of the pairs that if you're doing a little bit more nighttime trading or you're going to trade after work, look for the the Australian news releases. And that's really what's been a lot of the catalyst for this pair. You'll see some of the movement came last night. When you're looking through the week, you'll see that there's, Lowe is speaking Wednesday evening at 11 p.m. Eastern time. Tonight at 6:30 p.m., Assistant Governor Kent is speaking. That's where the catalysts for this pair are coming. Typically is in the Asian session or the overnight session. So, again, if you are up, definitely start looking at this pair. But right now, there's no, distinguishable, if it hits here. The other thing I have is this 4 hour level up at 76.40, but we're about 40 pips from there right now. But again, taking that, when we can hit that, this pair only has about a 45, 46 pip ATR, meaning that's how much it will move on a given day. We're one of those out. Okay, so we need some catalyst to be able to get there again. Maybe Governor Kent tonight, and we'll kind of see. All right. Going down to the little sister, the Aussie dollar. Now, the Aussie dollar is in a little bit more interesting of an area. Okay, now that it's fully loaded. We had a bit of an area over here. We had some sellers. We had this really big push down and then a pullback, right? Now, where pullbacks stop is typically where you're going to see sellers. Okay, that pullback occurred. We drove all the way into the zone, immediately turned around, and now we're kind of doing a little bit of a retrace. So big push on Thursday, big pullback on Friday. Okay, and then we stopped. So if you guys look down here on this 4 hour, we missed the sell zone by about By about 3 pips. Okay, where we had a kind of a trigger that if we get to this area, we're looking to sell. And it pulled back, and it went back into a level of basing. So we're seeing some green right now, again, based off this pop, sideways movement basing, and then a large push off. So when it came down and stopped here, this was entirely expected. We're kind of what we would consider in a confirmed uptrend at this point. You guys will see impulse correction, impulse correction. So higher high, higher low, higher high. Again, higher low right now because it's green. So we'll see if we can continue to push this. So we are in an uptrend. And we'll see how things progress, into this morning when obviously U.S. money and the U.S. markets turn on. Again, this could be pushing back up based off that area, or it could be, looking for more orders. Okay, more orders may exist in this area. Again, that's one area where we had some basing. Not as concerned here, and this isn't super, super clean. Best thing right now is where price is. So if we start to drive higher above 70.55, I do feel good about, kind of this one going long based off what it ran into. But if this is where it's turning, if it's putting a green in now and it gives us another red, that's going to be a sign that, again, we need to get short this pair, in my eyes. And I'd probably take this back down into at least, about 40 pips lower, back down into the, 70.00s. I think that's going to be best. And remember, guys, don't forget that this also goes along with gold. So any mention about gold or inflation, that will also send this pair kind of, moving all over the place. All right. Going over the euro pound, now you can see euro pound. I'm not a big trend line person, but I will put things like that on charts to help people understand where they get faulty for people. So we had this nice trend. I mean, we had what, 1, 2, 3, 4. We had 4 touches before we broke, and then it kind of popped back in a trap. And topside, same thing. 1, 2, 3, 4, 5, 6, touches before we kind of went to the sideways. This has been something we've been talking about, how the angle was very, very steep, right? Very, very sharp angle, and then the angle kind of changed here, and then the angle kind of changed here, and now we're kind of bouncing sideways. So trend lines are great when, again, they're definitely visually helpful, right? Because okay, yeah, we're in a trend. I can connect the bottoms, I can connect the dots, but it also hinders you because everybody can see them, okay? There are a lot of traps that are set on the outside of trend lines. And that's what we saw here. We finally broke it, and it was actually a sideways break, not a downward break. and immediately got sucked right back inside. So this was a trap. Now, this was a little bit nice of a break. A nice push down and then another red day down, and it didn't quite make a new low, but it was very, very close. And again, right now we're getting some obviously some buying pressure back in here, right? The euro getting some strength and obviously some pound weakness again, but it's also coming back on the 4-hour to this kind of little hidden area. And when I say hidden areas, this is what I'm talking about. This little wick over wick area. These are kind of hidden areas of indecision, and they're everywhere. Very, very common areas for price to turn and flip, to go up and grab more buy or more sell orders. And if you look on the 30-minute, it's kind of leveling off here. We had some, green in there. We had some red. It definitely is running into some sellers right here. So this could be the potential, in the next hour or two for this thing to start moving back down again. Okay, and at the speed and the velocity of the ascent here is also showing me that this is potentially kind of what we would call a racetrack that we should be preparing for a retracement down. Okay. Now, that's the kind of mess with people over here. Whenever you see a break like this in a trend line, you'll get people that are starting to jump in. Oh, trend's broken, trend's broken. Well, trend's not broken until it's confirmed that it broke. Okay. This could just be some type of a catalyst reaction to trap people and get, traders that are not in the know. Okay. And that's what it looks like it could be doing right now. So just be cognizant of this pair as well. Again, this could be the turning point for kind of a push back down again. Now, this pair does have a 42 pip ATR, so it's not the biggest mover right now in the summer. But again, if you're going to trade this on smaller time frames, or I'm sorry, on smaller, expiration contracts like the 2 hours, there you go. Okay, you definitely have some potential to trade this when the strike differential is much, much smaller. Okay, just be cognizant as well. Kind of a warning message on this one. Remember, when the Europeans are out, around 11:30 is when you got to start getting worried. This one will lose a lot of its power and potential to move because they are leaving the market for the day. All right, dropping over to Euro Yen. So I like where Euro Yen is. I was hoping we would start the week where we are right now. Okay. On the daily, we've been kind of stuck inside of this channel. Now, quite a large channel. I mean, we're talking about, going from 121 up to 123.50. So it's literally been bouncing. It should look more like that. So I've had an alert here set for this one. And we're at, what, we're real close right now. I have an alert set right at the 121 mark. And I want to know when it breaks out of the bottom side of this channel. Not to go short immediately, but looking for a confirmation, looking for a pullback to be able to get into this to the downside. So, I mean, obviously from here, it can only do one of two things. It's either going to pop or go down. I mean, maybe it'll give us another one of these little tiny bodies. But this is the third touch or third attempt at this bottom area. Okay, eventually there will be no buyers left. Okay, every push down will eat up all the buyers. Once the buyers are gone, price will drop. Okay. Now, this also coincides with what we've been talking about. The euro pound, way up here on the chart, looking for a downward push. Okay, we have some, policy statements from them that don't look the best so far. That could be what, pushes this down. Where we are right now, it's lined up on the third, the third attempt to push it lower. This is what could push us down. So there's a lot of stuff that's signaling that we're going to have some type of European weakness. And again, that's what I'm looking for. I'm looking for somewhat of a retrace. And you guys can see, I mean, obviously it's on, this was over the Sunday night into Monday morning, somewhat flat. I mean, it's, kind of coming down. And again, it's here, again, area. This is a nice little push here. And if we can break this level of basing, right now we're kind of stuck between sellers here, buyers here. So we want to break that, and even so, there's some buyers down here. We're right where I want it to be. Like I said, I have that alert set at 121. We are kind of 121.01. We're kind of right there right now. I'm waiting for kind of a good little retrace, a nice little pop, a true break of this area. I mean, I guess I should probably move my alert down to this 120.80 area because that's where we had some basing. But none of this was really powerful. This is just kind of just blah, right? So looking for some movement, looking for life here. Unfortunately, these bodies have gotten very, very tiny. I'm looking for some, here. So hopefully we get that today. I'd like to get a pullback. If we can pull back to 121.40, that could be, in a nice little pop. That could be something I'm, willing to start playing with a little bit. All right. Euro dollar. So euro dollar is something I'm going to be watching. Euro dollar has literally been bouncing back and forth. This one is down to 53 pips ATR, which is actually rather low for it. And you can see, Thursday, we went from 112 basically up to 112.84, and then on Friday we retraced right back down again. Okay, we kind of did this kind of mirror pop, and again, a very common pattern, right? Off of, it went up into an area of basing that we had from here, right? It was this area, I'll draw it for you guys. I'll just take this. Okay. This is the area I was looking for sells, right? It hit, it dropped back down right to where it was supposed to go, came right back up again in one candle, hit the same kind of sawtooth entry here, and dropped right back down again. So it's doing what it's supposed to be doing. Here's the target that we had for this one, and it did. It hit the top, came all the way back down again, whether you got in for a confirmation or you got off of this 4-hour zone. It came all the way back down and literally pegged it to the, cranked it right here. And now we've been kind of floating around that area, all right? We are starting to push out the bottom, which I am liking. This one is kind of hard because, yes, it can push through this area into this gray zone. And there's a little bit of buyers right below at this 112, right? This 112 flat. Typically, once we hit the 112 flat, people start eyeing up 111, thinking that maybe we could get down to the 110 area. And you can remember, last time we were down into this 111 area, we found a lot of buyers. We had been pushing, and you guys, I'll shrink this down. We'd had these measured moves, right? Again. We had 5 in a row before we finally got dinged. That 111 was the magic number, and then that became the rally point up, okay? And now we're just kind of stuck. We're unable to kind of break lower. And again, it's 111, 93-ish area is where kind of the line in the sand was. And now we're not even popping to the top side. We're stuck because of this kind of sawtooth pattern. So this is definitely a trader's one, right? And again, we're at a bottom area with buyers, and I'd like to see it collapse. We've hit it 1, 2, 3, 4. This is really the fifth push through. Typically, the lines are dropping at that point; they're faulting. So, we'll see if this is kind of the push. And again, if we can get a nice little green and then a nice red close down here, that gives me that kind of 3-bar pattern, that 3-bar confirmation that this is going lower, particularly with the timing of when U.S. traders come online. Looking at pound yen. Okay, pound yen is we're having some problems, right? This is what pound yen normally looks like. If I go back, you guys can see these nice big wicks, back and forth. You can see it now. It's getting tiny, right? Just this up. Okay, you guys can see there's some nice movement in the euro pairs this week, but again, this is what we had at the end of last week. And here's Thursday, nice pop, and then Friday just was like, boom, it just dropped on us. So here's where we're looking to get into an entry. We had kind of an entry right around 135, and this was at the end of last week. We had mentioned it. And I'm not a big, hold over the weekend type guy. But again, we had people that were interested in getting positions there. And again, we had a nice push down over the last 4 hours. It, kind of went up, grabbed it, and went straight back down again. You guys can see it over here on the 30-minute. But we're still kind of, again, we're wedged, right? We are engulfed. If you look at these 2 green candles, right? Okay. Right now, this current candle, what we would call that is the action. So I don't focus on that as much. I focus on what came right before that to determine trend. This green is really not really impressive, and it's engulfed inside of the previous move. So bit of a pullback, and it gets to be a bit of a mess down here. I was using this for something else. You guys can see pretty messy, right, in this area. Again, not going as high. Then we had I'd say it's a lower low based off of this pattern. And then we went up, but it wasn't really a higher high, a little higher here, but we didn't really break anything that was monumental. And then bam, we pushed right back down into this kind of area of buyers. So we are sitting in an area of buyers right now. Here's our retrace. You have a retrace anytime you have a large kind of push down. I'm going to see if it pushes lower. If it goes below kind of 134.40, just a little bit below, that would give us kind of somewhat of a confirmation that we are trying to push down. But this pattern over here on the 4-hour is very worrisome. Okay, it's definitely an area of buyers, price push down, and that became a rally point higher. And we're at the very start of that kind of buying area. So consider that an area of landmines for bears. I think you got to be real careful. I'm trying to short this thing right now. It's typically very dangerous to short after a large kind of movement in price to the downside. Obviously you can get confirmations, but we're sitting in an area of buyers. So be very cautious with this pair today if you're going to jump in there and trade this one. Pound dollar. Okay. Pound dollar is in a little bit better of a position. Okay. We are kind of through this area. This was the original area that the old area of sellers became the area of buyers. We've pushed all the way to the bottom side of that, so not as concerned about this one. This one I have a target down here of 124. Okay, right about here where the start of this green area is. Now, whenever you get somewhat of a gap, it does make things a little bit strange. Again, you can see the gap on the daily. This guy, it's not a bad push, but whenever you see something like this that basically is just a wick where there's no body, that's where you're kind of like, ah, God, I don't like Sundays, right? And again, you can see we closed here, opened, it came back up, it did its retest like it was supposed to do. You know, you can see the same pattern here. We closed right here, and then boom, it went down. It came back up and retested, and then continued its downward push. Okay, that's a pretty common pattern, particularly over the weekends. If you guys are catching those, anytime you have a gap in the direction of the trend, look to re-enter that position, or look to enter that in the same direction of the trend when it comes back up and test. This one actually went a bit higher, but it went back up to an area of sellers, so not necessarily too much of a surprise. So that's on its way down. I think we'll kind of continue to see this kind of lessen today. I'd like if we can get at the end of today down to the 124 area. I think that'd be a great area. That would bring us right down here on the 4-hour, and that would set us up into into tomorrow in an area of buyers for somewhat of a retrace back up. Okay, going into dollar CAD. All right, dollar CAD was definitely a trader's pair last week. You guys can see on the 4-hour, this was up, down, up, down, up, down, and again, this was one of our top 3 trades last week that we talked about. Been a bit tricky though, because we have had a couple spikes through areas of buyers and sellers just to retrace back again. So it has been a little bit more difficult, although you guys can see on the daily, it's been blown through 4-hour spikes, but been hitting the daily, right? In this daily sell zone. I mean, we've literally hit the top, we went all the way down, we hit the target. Well, actually, we started here. We went up, we went down, hit our profit target based off the prior area, went back up, went all the way through, hit our target again, went all the way through again, and burst through the top. And again, you guys can see this was the 1, 2, 3 kind of attack. 4, I don't think it's going to hold. And the fact that it went all the way up to 131.11, I don't know. This is, I think we're going to get some pushback up again. We'll see when U.S. traders come online. There's not really any U.S. or Canadian data today, but after the way that we closed last week in the markets, I think there's going to be some talks, maybe some, we'll see how the U.S. money is feeling this morning. If we get back up to 131.10 over in this area, back at that area, I'd probably be willing to start looking for lower time frame confirmations for a switch. We're a bit far from there right now. It would have to move about 30 pips from now till 10. I don't know that we're going to get that much movement in 2 hours. I mean, I guess it can, but I'd be looking for some type of a reversal. If you guys look around 10:30 this morning, look for a reversal in the U.S. stock market, and that could also provide the reversal for what we're looking for here. For the rest of the week, areas that I'd be looking for on this one, this 131.30 area has been a good 4-hour zone. Above that, 131.80, if we can get up to here, again, that's about 100 pips from where we are. It's about a day and a half worth of movement. That's a definite sell for me. Downside, I got nothing. Okay. It's been a long time, back to October of 2018, since we've been down in this area. And really the best zone that I'd like is down at this 128.50. So we got a bit, get about 250 pips to run to the downside on that one. So for me, I'm still looking for these kind of pullback downside runs on the dollar CAD. Looking at dollar Swiss, okay. Dollar Swiss has been, it's been reacting pretty well. It's been pushing back again. It's kind of stuck right now again, Sunday, not surprised. One thing I am looking for in this kind of downward push, be cautious. There is this gap area here on the daily that you need to watch out for, but I am using a target of 97.61 for our kind of current downtrend. This was a trade that got entered last week on last Tuesday, kind of right after we talked. And you've gotten a couple different entries in here. You've gotten a couple different things, but this was a nice little 4-hour zone. I like this 4-hour zone still. For some reason, if we do start to see any type of rally back up again, 98.90 to 99.10, this little 20 pip zone, nice little area, okay? Nice little area to take some shorts off of. Vice versa on the bottom side, this target is also an area where I'm looking for price to retrace or restart kind of a push back up again, this 97.64, 97.65 area, to start dropping down and looking for long opportunities. On the lower time frames, again, a lot of times with this pair, you do have to find smaller zones. 98.66 to 98.72, this little kind of 5 pip, 6 pip range right here. If price can pop up, be looking for some type of a short on a 2-hour to the downside. Okay, and again, this is one I definitely look at smaller time frames all the time. Okay, looking at dollar yen. So dollar yen just popped itself off of a lower kind of time zone, or a lower kind of buying area. This was a kind of a more recent low back on June 25th, not even a month ago, down at 107.27. We've taken a nice pop off of that. Okay, this was so here's I was leaving this on here. So here's one, here's two, here's three, and you guys can see this fourth one just got destroyed. It went right through the buying zone. I always like to keep examples up, and you can see it pulled back too, right? It went all the way back up to where we saw buyers based off the racetrack, right? This big push down. So again, 1, 2, 3, and then 4 collapsed through. So those are important to mark off. This one I wanted to move down to here. Okay. Where we are right now, we're kind of on the top side. We've just put a lower high in. Okay. We did have a bit of a lower low right here based off of this pattern, right? Now, here's a very, very common trap as well. I always love to point out traps. If you guys see this, so you guys may know this pattern. Oh, this is down. This is down. I have to go long as soon as we break here, right? But what happened? If you would have went long, what happened immediately? Boom, straight back down again. So be very, very cautious with these patterns. This is why I'm a big believer in price action. Looking where prices turned prior. Look for unfilled orders out in the charts, and we had that. Okay, you guys see this little? Remember we talked about the wick over wick a second ago? My traders, my students love this. They're like all over these now. I'll use this one. You guys see this area right there? Whoops, not that far. You see what we bounced off of? This little peak. So again, this I was talking about. This was a trap setup. Okay, it was a bounce off of a 4-hour wick over wick selling zone, and that's what initiated this kind of downward movement again, right? So we are pulling back, and again, it came down and grabbed the orders at the start of this move. So it was a small trade. You're going about 15, 20 pips to the downside, which again, not bad for a Sunday night. But again, this is an area of sellers that we're definitely keeping an eye on. And we'll see again when U.S. traders come online. This will be linked with the the Dow, and we'll see where we get our movement. Big zones I'm looking for on this. Again, I do like this is something more for an intraday play, but I am still looking at 108.26 being a big area, and I'm looking at 107.17 as being kind of a bottom side, kind of a channel back and forth between these two. Again, that's what I'm looking for in this one. Like I said, this is kind of more of an intraday pair. I think this one may, depending on the news today, today and tomorrow, just a little bit of a warning, may be a bit slow in this one. With no news, there's not a lot for people to talk about. Maybe some earnings releases, maybe some options contracts, but for the most part, you need a little bit of news to get the market moving in the correct way, and that's what will generate movement in this pair. All right. All right, so, well, with that being said, let me pop this one up real quick. Oops, hold on, that one. Just want to say thank you for joining us. That's the end of today's session. We will be back on next week. If you guys want to get in touch or have any questions with anything I said, if you're curious more about those wick over wicks, this is how you get in touch with us. Go to keeptradingsimple.com. You can see some of the setups on Instagram that we post during the week, different examples of how to play them. We are on Facebook. You can catch us nightly on Twitch. You can also cover us on Discord. We are there, and our traders are talking about different setups during the day. And if you have questions about something and you don't have any of these other things, you probably have email. So you guys can go ahead and email me, and I can answer some questions for you at support@keeptradingsimple.com. So thank you so much for joining us this week. I'll see you same time next week. And again, next week is exciting because we're getting back into August. And with August, typically comes movement, especially in the currency market. So you guys have a good day and take care.